Good morning, multi-bagger hunters. Welcome back to the Daily Hunt, your Monday, April 6th, 2026 check-in for AI-generated market commentary.
That's right, Ethan. We've had a busy weekend, with our AI sifting through a good number of discussions from yesterday, Sunday, April 5th. We flagged a few different stocks that are catching attention.
And the market sentiment? Well, it's a bit of a mixed bag today, Brooke. Some promising growth signals, but also some significant cautionary tales, as our AI is highlighted. We're seeing a push and pull between high growth potential and some deep financial red flags.
Let's kick things off with NVIDIA, symbol NVDA. Our AI spotted about 11 relevant posts for this one. The overall assessment from the AI is buy with caution, which is a slight downgrade from our last buy rating on April 3rd.
You know, for good reason, Brooke. NVDA continues to show absolutely stunning growth potential. Its revenue growth is at 73.2%, net profit margin a whopping 55.6%, and return on equity over 100%. This company is an AI powerhouse, consistently generating news about its dominant position and a $1 trillion AI goal. We're talking about a generational investment opportunity here, and the significant net insider purchases really underscore that internal confidence. Yes, the PE ratio is high at 36.2, but with that kind of growth, it's often justified.
Ethan, I agree. Those numbers are undeniably impressive for top line and profitability. But my KPIs are also telling me to approach with caution. That PE of 36.2 is significantly above the average, meaning a lot of future growth is already priced in. Any slight miss on earnings or a slowdown could lead to a correction. Also, the debt-to-equity ratio at 7.255 is quite high, which is a risk factor that we can't ignore. And while there's a post talking about upcoming second quarter earnings, our corporate events list the next date in May, so we need to be careful with the specifics of user-generated content. Someone holding bags at 188.5 when it's at 177.39 tells you that even hypergrowth stocks aren't immune to personal losses.
Fair points, Brooke, fair points. But the fundamentals are just so strong.
Strong, yes, but not without elevated risk.
All right, so for NVIDIA, given the incredible growth, but also the valuation and debt concerns, our AI-generated insight for today is cautious buy.
Next up, we have W&T Offshore, symbol WTI. This one generated around 20 posts. Our AI analysis for WTI is a clear stay away, which is a downgrade from speculative gamble on April 3rd.
Well, Brooke, I have to say, the general market for oil looks promising. We're seeing news about rising oil prices, global fuel shortages, and geopolitical tensions leading to supply disruption concerns. The WTI crude itself saw a 3% increase, and there's talk of $100 oil. Historically, the stock has also seen a substantial increase from around $1.09 to $3.15 in the last year. This bullish sentiment for the commodity, could really provide a tailwind for an energy company.
Ethan, I hear you, and those commodity-level tailwinds are definitely there. But when I look at WTI's KPIs, it's a completely different story for the company itself. We're looking at a net profit margin of negative 29.9%, an earnings per share of negative 1.01, and a price-to-book ratio of negative 2.345. These aren't just red flags, they're giant waving crimson banners. A negative PB means the company's liabilities exceed its assets. That's severe financial distress. Revenue growth is a paltry 1.1%. Even if oil prices soar, this company has deep-seated operational and financial problems that make it a very high-risk play. The historical stock increase could easily be speculative froth, not a reflection of core health.
So you're saying that even with a strong wind at its back, the ship itself is, taking on water?
Exactly. The risk of capital loss due to weak fundamentals far outweighs any potential upside from a bullish commodity market, in my view. We've rated the stay away several times recently, and frankly, the numbers still support that.
All right, then for W&T Offshore, our AI's current sentiment is a firm stay away.
Investigate as buy? None. Investigate as cautious buy? NVIDIA Corporation, NVDA. Investigate as speculative gamble? W&T Offshore, WTI. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Thanks for tuning in to the Daily Hunt for Multibaggers.
We'll catch you next time.